Good morning. Good morning, everyone. We have everybody online here. See people joining in. We're just going to start. I'm Armand Sorra, Zeifmans manager and member of technology and startup team here at Zeifmans. I'm very pleased to be kicking off Zeifmans Non-Resident Digital Event Series today. For themed expansion and innovation on startup and technology companies. Our very first guest on this series, Alex Norman, partner at N49P TechTO, co-founder, and AngelList Canadian Partner. Before we start with our interview with Alex, I wanted to share with you a little bit about our firm. Zeifmans is a full-service tax, accounting, and consulting firm based in Toronto, Canada. We go beyond traditional accounting services and offer strategic business guidance to our clients, and we're involved with our clients from day one through their IPO and beyond. Today, I encourage you to ask questions throughout our interview with Alex. We will try to address as many of your questions as we can at the end of the interview. With that, I'm pleased to welcome Alex. Alex, please tell us a little bit about you and what do you do?
Thanks, Armand. I'm very excited to be here. My name is Alex Norman, based in Toronto, grew up here, and through a long career journey where I worked in finance, worked at startups as an operating role, and I've been a financier myself, I have now landed in a role where I help grow the Canadian tech ecosystem by doing three things. One is I run one of the largest communities out there where we help founders and people that want to get involved in tech learn from each other. That's called TechTO. The other is I launched a company called AngelList in Canada, and that company helps get financing into early stage startups. And finally, I have my own fund where I invest in early stage startups across Canada. And I've got about 30 active portfolio companies right now.
That's impressive. Thank you. And it's great to have your expertise in today. I'm going to go through a few questions, and I'm going to start up with, the overall business environment in Canada. Why do you think Canada is a good place for business for startups, and what are some of the expansion opportunities for international companies coming into Canadian markets?
So I'll start with the thing every technology company needs: talent. We have two competitive advantages in Canada, and particularly the Toronto area. One is we have a lot of programs that train and provide education to engineers, designers, the STEM graduates. In the Toronto region, we have more STEM graduates a year than they have in New York State. So you have a lot of, and you have similar education systems in all big cities. You can go to Vancouver or Montreal. A lot of great graduates and educated people being produced every year. The second thing, which makes it enticing from a talent perspective, is we have relatively open borders. Now, given the current situation, it's not easy to move around the world, but unlike the States, which is making it harder and harder for people to land, we have different visas. So that if you're looking to hire engineers, you can't find a talent locally, you can go internationally recruit and have someone landed here within 2 weeks normally. So that means you can get the talent to grow. Second of all, I think lots of our legal, you have lots of government support in either stuff like the SHRED program or IRAP, which are programs that subsidize, research and development. You have relatively low tax rates, despite what people think about Canada. Our corporate tax rates are low. And third of all, you have a diversified population, which means is you have a population that represents the world and is connected to the world. So if you can, we're not exactly like the States, we're not exactly like China, but you have populations that are willing to try, bring very different mindsets, are very open. And then if you can make it work here, there's usually a way you can expand abroad. And then for the second part of that question, why should an international company, open up in Canada? I think there's two things. One is for tech companies, I must speak to a large tech company every week that basically is coming here for the talent. Hey, we can set up, we can recruit. There's a lot of great talent here. And the second thing is, especially, for Europeans, it's a great way to go attack the American market. For Americans, it's usually a good first step outside of States because our consumers are somewhere in between, and our regulations are understandable. And for the rest of the world, usually there is enough of a diaspora here to take a brand that's well recognized, let's say in India or China, and open up here with a core group of users that can, either be business or consumers that will be open to your brand and make your expansion a bit easier.
Right. Yeah, that's great. And I'm glad you touched on the open borders part. My next question is kind of the reverse as to what are your thoughts in terms of you have an established business in Canada, a startup, and what should the owners do next? Where is the opportunities to expand internationally? And is US, the natural expansion for Canadian companies, or is there something new?
So I would break this down into two different types of companies. I think if you're purely digital, so if you are the next Zoom, if you're Shopify, to a certain extent, you can expand globally from day one, right? It's just a matter of how much you have to localize your product and can you accept currencies, understand the tax implications of different countries. Today, like you can use Stripe or a bunch of other technology to accept payments internationally. You can use TransferWise to handle multi-currency accounts, but it's the localization. So I think digital, you could basically open anywhere. If it's more physical aspect or service-based, it depends on the regulations in the industry sector. But naturally, I think most Canadian companies look at the States to start with. I think it makes sense. Similar language, similar mindset, not exactly the same. But I think the challenge for most Canadian companies when they look at the States is you have to be on top of your game. And what I mean by that is I've seen lots of companies here that have relatively cheap customer acquisition costs. They go to the States and they find advertising on Facebook. They're paying 4 or 5 times as much to get a customer because they haven't had the competition. So it's an easy market to go expand to. The challenge is that it's a bit more competitive. So I'd say 70% of the time the States makes sense. And sometimes if you like, I've seen companies that have a niche that are serving the Chinese expat community in Canada. So they've actually makes more sense for them to go to China. It's a bigger hurdle from regulatory and legal perspective and regulation, but they have a diehard customer base that gives them word of mouth back in China, or it could be India or somewhere, just picking the 2 biggest countries. It could be Brazil, but 70 to 80% of the time, the States is the easy no-brainer.
That's great. I'm going to turn the focus to, one of the most common questions I would say we certainly get here from our startup clients in terms of financing. What would be your advice for someone who's looking to finance their startup in Canada?
So, first, I think the biggest piece of advice, and if it makes sense, I can drill down into this, is understand what type of financing is right for your business. So I see a lot of people looking for venture capital financing, but they're building something that doesn't have venture capital scale. And that's not a bad thing. It just means there's not the right type of capital for them. Likewise, I may see some people going for a loan, and there's no way they're going to qualify for a business loan. They're a month old, they have no assets. So I think the first thing is educate yourself on the different types of financing available and see what applies to the type of business you're building. And then the secondary advice would be, depending on that type of financing, there's different paths to take. So, for example, just if you're going for venture capital or angel money, I think if that's where you think the best fit is, I'd say it's try to reach out to people before you need the money and build a relationship, because those type of investors want to invest in, understand who they're backing, versus if you're talking to a bank and you're buying equipment and you're getting leasing for that. So I don't know what it would be for a startup, but let's say years ago you'd buy a server farm. You don't do that anymore. It's just literally know how much of that asset's financeable and who finances it. So, but I think the first thing is understand what's the right fit. If you're trying to build a company like Facebook, it's angel and venture. If you're trying to build a business that's, let's say a direct to consumer business that you can get to $5-8 million, it's how do I finance the goods? How do I it's not going to be venture capital, right? It could be angels, it could be inventory financing, but it's do the research, understand what your ambition is, understand what, how people typically finance similar companies, and then based on there, it'll be different paths to take.
Awesome. Yeah, that's great advice. And in terms of monetization, what would be your advice for now someone who has established their business is looking to sell and monetize?
Yeah. Um, this one is all, I think it's better to be bought than sold. What I mean by that is the best outcomes come when the buyer is approaching you. And, if you do really good, like if you're a Jedi, you get them to approach you when you're ready to sell, not when you don't want to sell. So lots of people are scared to start talking to potential acquirers beforehand. But I think the second it could be, and it could be a distributor or a partner, it could be, and
Right.
So I think it's build those relationships sooner, so that you have someone that's eager to pay you more than you would get if you went out to market. So I think it's have those relationships, start
and being ready.
And being ready, right? Because I think if you go to market, and you start saying I'm up for sale, you'll never get as much as you want.
Right. Yeah. That's a good point. And I think now I'm gonna shift into what the investors look at in their point of view to startups. And I want to ask you, given your experience, what is one quality you look for when deciding to invest in a startup?
So it's not one quality per se. I think the most important thing at the early stage, you're investing in a team. So who are the founders? What's the unique insight they have? And why do they have a right to win what they're building? And so I think if you don't like the founding team, you don't believe they learn fast, you don't believe they're tenacious, you don't believe they have an insight, and you don't believe you want to work with them, nothing else matters. But I think that's the first qualification. The second thing and third thing would be like potentially why now? So that goes back to what's insight they have, and then how big of an opportunity this is, right? So if everything goes right, can I make 20, 30, 50, 100 times my money?
Right.
Because where I'm looking as investors, I'm looking at probably if I do, like, again, I have 30 investments right now. I assume 15 of those will return less than one time the money. So I need a disproportionate return on one or two to give me a 3 to 4 times return on my portfolio. And so I think a lot of what people don't understand is, for me, I'm generally what I'm investing in. I'm an optimistic guy. I believe in the future is better than this today, and I believe everyone should be can build a company. But I see so much deal flow. I'm looking for the ones that I can, I put it this way: the founders could get there if they didn't have the money, and I can help them potentially. But I'm not going to make or break their path. And sometimes it's also just people I want to work with, because it is very intense, right? Like I take calls from founders I'll take texts from founders at like 9 o'clock on a Friday and be on a call with them from 10 till midnight. Sometimes my wife wants to kick me out of the house because of that. But I have to, the founders are the first thing, and then everything else is second. Like, with a close second being, is this something that could be huge, and why now?
Amazing. Yeah, that's great recommendation. And I think if we're probably going to get a few questions from our viewers today, and in the interest of time, I might just forward you after our meeting here. Did you have any final thoughts before we wrap up?
Just one final thought. Like right now, there's a lot of uncertainty in basically in the economy, and it's actually counterintuitively, if you have the capabilities of starting something and you've been thinking about starting something, I think it is a better time, because uncertainty means that markets will change. And if you have something people are always either looking for new revenue or ways to save money now. So the uncertainty creates opportunity. And if you can afford it, it's a better time than when everything's going well, because it's easier to get employees. It's hard to get customers, but if you could, they'll be more open to change. It's it's easier to get employees, and so if you have something that you've been wanting to build for a while and you can afford to do it, be bold. And this is a better time than it was, believe it or not, in January when everything seemed fine.
Yeah, great. I appreciate your insight in all of this. I'm sure this was very helpful for all the startups and our viewers today, and we'll share with all our connections and startup clients. I want to thank everybody who joined us today, and if you have any questions for myself or our Zeifmans Technology and Startup team, please click on the link in our bio, and you can book a one-on-one meeting with us today. Thank you again, Alex.
Thank you. It was a pleasure. Thanks for having me.
Thank you.